Hello traders, Adam here from Bull Logic, wanting to talk to you today about the option profit. Now one thing we know at Bull Logic is that a lot of traders don't really have the experience with options. That is putting the trades on, knowing what they do and how they work. Even more rare is traders who know how to trade credit options. So when they look at the option profit, yes, it's making 100% wins, no losses, but people don't know how to get into the position. So I'm going to show you exactly how easy it is to trade the alerts we put out in the option profit. And today I'm going to be demonstrating that on the TradeMonster brokerage. Now we don't have any affiliation with this brokerage. I'm going to be using a paper account. As you can see here in the window, it says paper account, just to demonstrate exactly how to put in the trades, how easy it is to make these trades, and how easy it is to make money using the option profit. So when you first log into TradeMonster, after you go to their website, you click on Launch Trading. This is going to bring up your trading platform. When you launch trading, it's going to go through this little setup and it's going to get into your account and it's going to show you up history. This is the default window that pops up. Now below, I also have an email alert. This is the exact same kind of alert that we send out in the mornings before the market opens. Typically, we'll send out alerts an hour to 2 hours before the market opens. This is going to give you plenty of time to read through the alert, understand exactly what we are trying to do, ask any questions that you may have, and finally to put on the trade all before the market opens. That way you're not rushing to try to get the order on, and that way you're not trying to hurry and it might mess things up. This is going to be a very simple alert, as most of ours are. First thing that we're going to see in the alert is the subject. We always have the subject as the option profit to start it off. That way you know it is from us. We're going to be opening a new position. And then when you open the alert, we're going to have it full of information. First thing you'll see is the name, the option profit, then the date. This is going to be the date of the trade. Today is the 23rd of February 2013. The status is going to be what we're going to do. In this instance, we're going to open a new position. We could also adjust a position or close a position, and it will say what we're going to do accordingly in the status. Down here is the main guts of the alert. This is what you really want to focus on. This is going to be the trade. And in this example, we're going to sell the SPX April 1365 puts and buy SPX April 1360 puts. Now that sounds like a lot of gibberish, but it's going to be really simple to understand, and I'm going to walk you through exactly what we're going to trade when we get into the platform. Another thing you want to notice is the type. It's going to be a vertical spread. That's because we are buying and selling two options at the same time. That's going to make it a spread. Our bias is bullish. It means we hope that the SPX or the S&P 500 goes up. That's how we're going to make our money. The premium is 0.25 or $25 per contract. That's exactly how much money we plan on making with each contract that we sell. Our max return is going to be 5.26%. You can read about how we figure that out in our FAQs. Basically, we just take the premium and we divide it by the spread itself. But make sure you read about how we figure our max return inside the FAQs. This is our break-even price. This is the final price that the stock has to get down to for us to lose money at expiration. Our underlying price, this is the current price, what it is now. Our days until expiration, and finally the probability of loss, which are all pretty self-explanatory. Now, so you get the alert in the morning. You got a couple hours before the market opens. You launch your TradeMonster platform. You go in here. It's opened up to account. First thing you want to do is click on Trading and come down to Options, because we are all an option newsletter. That's all what we put out. So you're going to get it an option chain. That's what this is, where it has the calls on the left and the puts on the right. It has your strikes in the middle. It has all your expiration months at the top. And it has your symbol here. Now, the symbol right now is default at QQQ, but we want to change this to SPX. That's exactly what our alert says, SPX. Let's go ahead and load it up. And it takes a second to load. And finally, we get all the XPS options for March. Now, we're not trying to trade in March. What we want to do is trade in April. As you see, our expiration month then here is April. So we want to go click on April. We want to unclick March. That way it takes us to April. As you see, April 13, it's April 2013. It's got 56 days left until expiration. One thing to notice here with the expiration months is that you have weeklies. In here, these purple ones are the weeklies. Now, we don't trade these very often. When we do, we specifically state that we are going to trade these, and we make sure you know exactly which ones we're going to trade. So make sure you click the ones that don't have the extra dates or the ones that are in gray. These are the monthly options like the March, the April, that May, and following the June. Now, another thing you want to do is, since we tell you that the type is vertical spread, you want to go where it says call and put, and you would click this little arrow, and it's going to bring you up all these different types of option plays. And the third one is vertical. That is a vertical spread. So it's going to go ahead and refresh the options. And as you can see now, the strikes are together. That's because it's going to let you buy and sell one all at the same time. So we're going to scroll down. We're still in April. We're still in the SPX. We are now looking at vertical options. And we're going to scroll down until we get to the 1365, 1360 puts. Remember, puts are on the right. Calls are always on the left. So we're going to scroll down 1360, 1365 right here in the middle. And we are going to click on it. And it's going to bring up our buy and sell dialog. And this is just going to give you a bunch of information. What you need to do is click the sell button, because all our plays are credit options. They are all going to be sells. So we're going to click the sell button. And it says sell, and this gives you the quantity 10. First thing you want to do is change the limit price. Now, our limit is down here in the premium. It is going to be 0.25. So we want to put that in, 0.25. Don't put in the $25, put in the 0.25 and click enter. Now, the first thing you're going to see is this little red box. It says this spread is a net credit to your account. That is exactly what we want to see. We do not want a net debit to the account. That means we're buying. What we want is a net credit. So you want to make sure you see that. And next, you have trade automation. You leave that. Time and force, you always leave the day. Special handling is always none. Now, the next thing you need to change is your quantity. Now, TradeMonster has a nice feature to let you figure out what your margin is and what your quantity is. So if you just click on that little calculator, it brings up your little margin calculator. So you have your buying power. Say you want to put $5,000 into each position. Well, 10 quantity is going to put you right under 5,000. Let's say you want to do 10,000 to each position. Well, we could probably up that to 20. We may be able to up that to 21. Oh, look at that. $9,991. That's what it's going to run. That's how much we want to put into the position. We want 21 contracts. It figured it out for us, so we're going to click Save. 21 is up there. It's got buy 21 April 1360. Remember, we're going to buy the 1360 puts. It's got the sell the April 1365 puts. Remember, down here in the alert, it says sell the SPX April 1365 puts. So that's everything we want. Still says 20.25, and it still says a net credit to your account. When you have all this done, you're going to go ahead and click confirm. It's going to bring out one last dialog just to make sure this is everything you want. It's going to tell you your cost. That is the money that you're going to receive, your commissions, that's what it's going to cost you, and this is the net profit that you're going to get from this position. Your buying power is going to go down, your margin is going to go down. You already knew this, but that's okay. So when you're done, you click send, and the play is in. That's all you have to do for our plays. Then you go out to work, you go out to play. It doesn't matter. You don't have to sit here and watch the position anymore. It is done. All right? So it's either going to run through the market and it's going to fill, which means the order is going to execute, or it's not. Sometimes we get orders that don't fill. That's just the way it goes. Sometimes the market just goes in the right direction too fast and we never get a chance to get in. Sometimes it's just a bad price. Whatever. If it doesn't fill, I will write on our website under the alert that the position didn't fill. Go ahead, cancel it, and we're going to issue something else in the next couple of days, maybe tomorrow, maybe the next day. But we'll issue another alert. So these are just good for the day. If you don't get the fill, then forget about it. If you get the fill, then great. You're in the position. Make sure you watch your emails. See if we have to adjust or close the position. Usually we don't. So then you're just set for expiration. When it expires, the position will be gone. You will make the profit, and we'll move on to more positions. It is that simple. That's all you had to do. Just go in, make sure you click the vertical, make sure you go down and find the strikes, go through and sell it, and you're good to go. Now, we also run naked options. What does that mean? Here's a naked option alert. It looks exactly the same as our last alert, except the trade is different. The trade says sell SPY April 135 puts, and the type is naked puts. So what happens if you get this alert? Well, same thing. Let's go and change our underlying. Now we're trading the SPY. And we're no longer trading verticals. Okay, we're just trading regular calls and puts. Now you're not going to see one in here that says naked. It's just going to be call and put. So we go ahead and click that. We're still in April, as you see, April. And so we want to scroll down to the 135s. And once we have the 135s up, we can see that we want the put side. Again, 135 puts. That means we're going to deal with the right side. Again, calls are on the left, puts are on the right. We go down to 135, we click that. It brings up the dialog to let us know all the information. We don't really need anything here. All we want to do is click the sell button. Now we got those sell April 135 puts to open. That's exactly what we had down here in our trade. Now we put in our premium. It's already at 0.35. That's great. We want to make sure the time in force stays at day. We want to make sure the action is still a sell. We leave our quantity or we change it. Again, you can load up the calculator to figure out what you want to do. Then you hit confirm, and then you click on send, and then that's all you have to do to trade our naked options. Again, very simple. We detail everything you need to know in the alert. All you have to do is match it up to your brokerage. Take your time, make sure you put in the right numbers, and you will be good to go. We don't make things too complicated for you. We want to make sure you can get into the positions and profit along with us. If you have any questions, make sure you please email me, adam@thebulllogic.com. I'd be more than happy to answer any and all questions that you may have. Thank you. Have a great day.